Hi, this is Andrew Abrams with RECUR360, and today I'm going to review how to set up a recurring payment plan against an invoice either created in QuickBooks or RECUR360 so that you can automatically process a payment on a set interval to pay down the balance due of that invoice. The example I'm going to use today is for orthodontic or dental treatments specifically related to Invisalign. So in my QuickBooks Online, I've created a service item called Invisalign treatment, and I've set the sale price on that to be $5,000. And so what I'm going to do is I'm going to go into RECUR360, and first off, I'm going to create an initial invoice for that. So I'm going to go ahead and under my new up here, I'm going to create the initial one-time invoice. So I'm going to choose who my customer is, and I'm going to choose myself. And we're going to set this to email the invoice and payment to the customer so that they get a copy of it. And what I'm going to do is I'm just going to backdate this invoice to say August 1, just so we can see the subsequent payments that would get applied against it. And with QuickBooks Online, you can use locations to track how your, if you have multiple offices, maybe as a dental office, or if you're doing business in multiple states. So I'm going to go ahead and add my Invisalign item. So one of these at $5,000. And so what this is going to do is this is going to post an invoice into QuickBooks dated August 1st for this treatment package. So I'm going to go ahead and create that invoice. Okay, so now if I were to go look at my QuickBooks and I go look at my sales and I go to my invoices and I go to my customers and we look under Andrew Abrams here, under the transaction list, we're going to see that invoice for $5,000. Now, if you're on cash basis accounting, this isn't going to show as revenue, but if you're on accrual basis, it will. So if I were to go run a profit and loss, and we'll just do standard profit and loss. Where are you? There's profit and loss. And we backdate it to August. We'll see it in there as August revenue. Okay, so there's that revenue sitting in there along with our other sales. That's if we're on accrual basis. If I flip this to cash, then obviously that doesn't show there. Okay, so you can just toggle that based on how you do your reporting. So now I want to set up the payment plan. So I can go into our recurring payments module. And now I'm going to add a new recurring payment. And I'm going to select what customer this is against. So we'll choose myself. And now I'm going to choose an open invoice that it's against. So I'm going to go find that $5,000 invoice. And we're going to say we want to process monthly on the first of every month, starting September 1st, okay? And what that says is it's going to run 2 times beginning today, because I backdated it. So it's going to charge them for September 1 and October 1, and then the next one's going to run on November 1st. And we're going to automatically charge their credit card or their stored ACH method. So they would have had to click a pay online link to update that in the system. And I can go back and show that in just a moment. And then we would automatically send payment emails. And in this case, the payment method is going to be, credit card. And so I owe $5,000 for my Invisalign treatment. So I'm just going to say we're going to spread that out over 24 months. So I'm going to use my calculator and take 5,000 divided by 24, and it comes to 208.33 basically is what that is. And this will just be the monthly payment. All right, so that's as easy as it is to set up a recurring payment, and it's going to end when it's fully paid. So I'm going to go ahead and submit this. And it's saying it's going to run twice to catch up for September and October. All right, so now if I go ahead and process transactions, or this would happen daily at 1 a.m. when our process transactions happens, it's going to go ahead and it's going to process 2 payments against that invoice for $208.33 each. One payment dated September 1st and another payment dated October 1st. And it's going to push those into QuickBooks and apply them against that invoice. And then what the customer is going to receive is an email showing that a payment was applied and what their balance due was. I'm going to go ahead and log into my email. If it will let me. Actually, do that in a new incognito tab. Try new incognito. Can I do a new incognito tab? No. I'll show that in a minute, the email. But so if we go look at our reporting history and we go look at payment history, we're going to see that those 2 payments were processed, okay, and that they were applied against invoice 1191. If we click on invoice 1191, we see the total amounts paid, and we also see that emails were sent out, okay. On this invoice, we have a recurring payments tab that shows the linkage of the recurring payment, and you could edit it from here, all right. And now if I go into QuickBooks and I go into our customers list, and we go under Andrew Abrams, we're going to see 2 payments there, okay? And if we go back to our, and obviously the invoice now has an updated balance due. And if we go back into our reporting and look at our profit and loss, and actually let's do profit and loss by month. That'll show the breakout actually a little bit better. So we'll show the last 3 months, so August 1st through the end of October here. So on an accrual basis, that $5,000 originally shows in August. If we switch this to cash and run the report, then the $208.33 is getting recognized when the payment got posted into QuickBooks. Now it actually should have posted a September 1st. Well, had I not backdated it, what it would have done is posted that payment on September 1st and October 1st. So I'm just going to change this one because we're trying to backdate it. Everything happened on today rather than on the historical date that the payment would have happened. So I'll just fix that to show how it would have looked if we didn't backdate it. Okay. Okay, so now if we go back to the report summary, so this is what you would see on a cash basis of the recognition of the cash showing as revenue, but then on an accrual basis, that's all in the original month that the invoice was dated in. And then obviously if we run an AR aging, you would see the updated balance along with any other invoices that are in there. Now, this is showing as due 61 to 90 days. So technically the invoice isn't overdue, but I didn't set up a term to account for that. So I'm going to go into my terms module and I'm just going to create a new term for 24 months. And actually, let me see if QuickBooks will allow me to do this. Yeah, so we'll just say it's 730 days. All right, and we're going to go ahead and edit that invoice and just change the terms on it. instead of due on receipt. Oh, let me sync my new term up in here, and then we'll go ahead and change that. Kind of created this on the fly. So had I already had my terms created, it would have already been synced in there. So let's see if the terms is showing yet. Yep, 24 months terms. And now it's due in 2023, okay? So we'll go ahead and update the invoice. Okay, and now in QuickBooks, if we go back to our AR aging report, that should show as a current balance due rather than it showing overdue, okay? All right, let me go ahead and stop sharing and let's just go look at the email that got sent out. So give me one moment to load up an incognito window. Okay, so let me share again. All right, so here's a copy of the original invoice that went out, okay? We have an option to show their overall customer account balance. You could turn that on or off. So this invoice was for $5,000, but they actually owed an additional $547. So that's what that invoice would look like. And then on the subsequent payments, here's a copy of what they would have received. And then it shows the balance due on the invoice. Okay, so with each one, it has an updated balance due. Now these happen simultaneously, so they kind of overlap. But this is what your customer would receive, showing, you know, each payment and then the overall balance due on the invoice after that. And then if they wanted to view or pay the remainder, they could click on this link here to view or pay online. And this shows their other open invoices in this case. And they could then just do a one-time payment if they wanted to pay it off completely, which would then stop the auto payment from occurring, okay? So again, in this video, what I showed was how to create a one-time invoice and then create a recurring payment plan against it, which will then get paid off once there's no longer a balance due on it. And I'll just go back into my RECUR360 just to show you where that lives. So we created a one-time invoice. We just did that from the new screen. And then we create a recurring payment that then lives in this module that's linked to the invoice. And once it's paid off, then the payments stop happening. So please come to our website, www.recur360.com. You can get on our live chat if you have any questions, and we're happy to give you another demo. Thank you.